Hello traders, this is Rich from Tradesight. This is the market preview for Tuesday, June 10th, 2014. We had a day here where the major averages basically just spun their wheels. The major averages across the board were pretty much unchanged. A little bit of a bounce in the Russell, which is definitely a positive for the bulls. But the major averages didn't move the needle too much. However, while we didn't move the needle, the one important thing is you always want to look under the hood here and take a look at the market internals. And while the market really didn't do anything as far as price, the market internals were pretty good. There were 700 issues up on New York and 1,000 on NASDAQ. And so that's definitely a positive. The one curious thing was the VIX pop today. It was up 42 cents. That's the cash VIX. So while the market was trying to move ahead, I think there was some big institutional money that was hedging itself and making a downward bet or just taking out some downward insurance. And I think that's really what kept the market from advancing today, because the individual stocks were not bad. You can see that from the advanced declines, and also the Russell, which didn't stand in the way of kind of the hedging overhang today. But definitely something we want to keep an eye on. A lot of times, from my experience, what happens is when a hedge gets put on, it doesn't really mean much for the next session, but you really have to be careful after that. And certainly the next session could be lower. That's very possible, but the one after that and the one after that are the ones you really have to be a little bit careful for. So if we do see the market internal start to deteriorate, then we want to kind of raise our guard. But for now, we're still okay. Here's a look at the ES futures. We gapped down a little bit, closed the gap, and really didn't do much versus the previous day's settlement. So we still have a positive candle here in that we've got a white candle. We closed above the settlement, so we don't have to worry about this being a key distribution day where we close below the day's open. Getting a little bit deeper here into the count on ES, but for now we're still positive. A little bit of a resting day. We did have that gap up on Friday, so that gap is still kind of out there and may need to be dealt with. That gap is still open, but for now, just a very kind of lackluster day with not a lot to talk about. We did make a new high on the move, and technically a new high close by a handle, but certainly nothing too impressive, that's for sure. Here's the NASDAQ side. The NASDAQ side was definitely struggling all day. It was relatively weaker versus the S&P. We did close below the day's open. We're up 2 days in a row. Today was down, so we do qualify for kind of a little bit of a distribution day. We were lower on the day, so it's not a contra candle, but certainly nothing really to be learned here from this chart. The gap is still open to a little degree from Thursday, Friday, so keep that in mind. We are in the overbought territory on the GAN box here also. So the plus 1/8 level is big, and the plus 2/8 level, if that does trade, is even bigger. But also be on guard for a draw into this 8/8 level at 37.50. Here's a look at the Russell. The Russell on the day looks very different than the other ones. It had been much more relatively weak versus the others. Starting to turn back up here. Pretty big day. The level to watch is going to be 1187.5, which is the Murray Math 8/8 level, which is certainly going to be important if we get back up into that area. Turning our attention to the bonds. Still just kind of grinding here, using this 50 DMA. That's the red line here as a key area. We're below the 4/8 level and below the 10 EMA on a qualified basis, so we are short-term negative, but still intermediate-term positive until we lose the 50, if in fact that's going to be the course of action. Oil futures were very, very strong on the day. Shot up to basically this triple top. Here's 1, 2, and 3. So this is something we need to watch out for. If we do break loose out of this, 106.25 could come into play, and then we've got a level about 108.5, which is the static trend line on the weekly, which could come into play. So we got to be looking out for that. Here's a look at the gold futures. Gold futures still just kind of hanging around this 1250 area. Not too much to be learned here. We've got our 13 exhaustion in place, and as we said before, there's not much extension here, so we're not looking for a big reversal off of this signal per se, though that could still be in the cards. But this 8/8 level is definitely the magnet for now in the gold futures. Well, oil was really strong on the day, so we always want to take a look at the comparison chart between the oil services, the OSX. These are the energy kind of providing issues. What you really want to see is you want to see the oil services lead price and break out to a new high, and then have the futures follow suit. Here are the futures here. This is the blue chart. Approaching the high, the oil services futures, are the OSX index rather, is still lagging. So that's definitely not the most bullish possible scenario for oil. If we do break out in oil, we do not get confirmation from the OSX. So it's probably going to wind up one way or another being a false breakout. So definitely keep that in mind. So we're going to keep on top of this chart this week as we're in this key area here for oil. All right, now here's a look at the cumulative advanced decline lines. Let's turn our attention to the bottom chart to start with. That is the NASDAQ side. You can see we're in this pretty well-defined downtrend here. We had some corrective activity in the NQ side of the market, the NASDAQ side. We set up this. We touched the boundary of the range right here, pulled back, and then that basically just recharged it to break out to the upside here. So we had a positive day on the NASDAQ side, plus more than 1,000 issues today. So this is definitely back into a positive trend here to the upside, well below the previous highs, but this is definitely something that the broad market needed. We didn't get the rollover from the New York Stock Exchange side, which is here on the upper chart. That's still punching out new highs. And at the end of the day, the New York Stock Exchange side really drives the bus, especially with the current market conditions, where people are still trying to buy yield and trying to buy yield through stocks. So until the New York Stock Exchange side rolls over, we're still okay here, and no signs of that just yet. Here's a look at the late cycle multi-sector daily chart. XAU did nothing on the day. It was actually a source of funds here, just kind of limping along here. The key OSX was a little bit higher on the day, but nothing too strong. The oil services, which is the transports rather, which is the purple, was kind of just lackluster today. Didn't do too much, but the big takeaway here is the BKX was really strong here. Had a pretty big surge today, so that was definitely one of the better performers today. So keep an eye on those stocks tomorrow, because they definitely are gathering some short-term momentum, and that momentum really shouldn't run out of we shouldn't have any problems until we really reach up here into the previous high. Here's a look at the individual sectors ranked from best to worst. Here's the XBD, which was Top Gun, part of the financial sector. The BTK was real strong. The XLF I dropped in here for fun, which is the ETF that follows the broader banks, was up 0.4%. Definitely outperforming the broad market, and certainly the NASDAQ side of the market as well. So pretty good action out of the financials. Oil services was okay, definitely outperformed. The transports was just in line. The utility index was actually pretty weak today in XAU, and the pharmaceuticals. That's the big broad-based pharmaceuticals were fairly weak today. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.